These days, AI can help you adopt better time management, but it can't stop colleagues booking meetings during lunch. But how about being able to easily adopt industrial AI to streamline your business? Siemens Accelerator helps you find the right AI providers and easily understand what they offer, so you can use modular solutions to quickly scale up and grow your business. That's AI for real, from the global market leader in industrial AI, Siemens. Learn more on usa.siemens.com/AI.
Your next product launch is coming fast. Don't let billing slow you down. Legacy systems can't handle usage-based billing. That means your team is stuck gluing code together, piecing through spreadsheets, and running ad hoc queries just to figure out what to bill. With Metronome, you can roll out new pricing in minutes instead of months, whether it's usage-based, seat-based, or a hybrid model. Visit metronome.com to see how companies like OpenAI and Anthropic launch billing as fast as they launch products. That's metronome.com.
At GSK, our focus is on doing the right thing for patients. We believe they should be free to focus on doing what they love, especially when they're living with a disease like cancer. That's why we focus where we can make the biggest difference, matching the right treatment with the right patient. At GSK, we're pioneering advanced technologies like antibody-drug conjugates that precisely target and attack cancer cells. By uniting science, technology, and talent, we work tirelessly to stay ahead of cancer together. Visit gsk.com to discover more.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. And straight ahead on the program, after a dismal August jobs report, is a Fed rate cut looking like a sure thing? I'm Tom Busby in New York.
I'm Caroline Hepke in London, where we're shining a spotlight on the UK's defence industry ambitions.
I'm Charlie Pellet with a look at the Chinese economy ahead of next week's readings on consumer and producer prices.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Tom Busby, and we begin today's program with what a sharp cool down in the U.S. labor market last month and some key U.S. inflation data out this week will mean for Fed policymakers. And for more, we're joined by Stuart Paul, U.S. economist with Bloomberg Economics. Well, Stuart, thank you so much for joining us. Now, before we talk about the Fed's next move, I really want to dissect what we saw on Friday with that August jobs report. I mean, what did it mean to you?
Well, the pace of hiring is just too slow to maintain a steady unemployment rate. We heard earlier in the week that that Minneapolis Fed branch president Neil Kashkari thinks that the break-even pace of hiring is about 75,000 workers. That's what the consensus was expecting for the month. Alas, we only saw about 22,000 additional jobs added during the month. If you really break it down, most of the net hiring is in the lowest skill human-facing services industries, things like retail, trade, leisure, and hospitality. While there is still hiring in things like education and healthcare, the pace of hiring in that higher skill industry has slowed dramatically. And with that, with slowing in demand for workers, we've also seen essentially a slowing in income growth. By our estimates, income growth in the month of August right now is looking like it's going to register just a touch above 0.3%. And when that's the case, the outlook for consumer spending starts materially softening. We had a pretty good July. It looks like August might be a little bit slower.
And let's talk about that shocker from June, that revision showing a contraction, 13,000 job losses.
That's right. It seems like revisions have been one of the more interesting factors with each of these payroll releases. You'll remember in July, it was also the revisions that were so shocking. Yeah, what's really most relevant for the Fed is that their understanding of the labor market is now updating. And as they get these revisions, the resilience of the labor market that they believed was so profound seems to be dissipating. What they thought was a strong labor market is actually being revealed upon revision to be a relatively weak labor market. We've seen all these alternative data sets pointing to cooling, hiring, slowing labor demand. It seems like finally the official statistics are catching up to it.
Now, do you see any indication that the Trump crackdown on immigration and deportations may have played a role, especially in construction, which saw a pretty sizable decline in jobs?
It's possible. It's really difficult to go from the more human element, things that we would capture in the household survey, things like the composition of the workforce, and then map that to payroll. So, for example, yes, as you mentioned, weak hiring in construction, but there was relatively strong hiring in leisure and hospitality, which one also might think has a relatively high representation of immigrant workers. So it's difficult to fully map the consequences of the inflation of the immigration crackdown. What is clearer, though, is that the break-even pace of hiring needed to maintain a steady unemployment rate is now lower than previously believed. It was thought that the break-even pace of hiring needed to maintain steady unemployment was a bit over 100,000. Now it looks like it's 75,000 workers per month or lower. And again, we're now running just about 1/3 that pace right now, and that's why we saw the uptick in the unemployment rate.
Wow. And the unemployment rate, though, 4.3% historically. Yes, it went up, but historically not a something to get very scared about. But I guess the question is, what does all this mean for the Fed? I mean, we're about 10 days away from another meeting. We've seen the signals from Jackson Hole, from Chairman Powell. Is a 25 basis point rate cut baked in at this point?
I think a 25 basis point rate cut is almost a certainty at this point. As you say, a 4.3% unemployment rate is not exactly high. And so it's difficult for the Fed to rationalize taking the elevator down on rates and cutting rates by 50 basis points or more. That's going to be very difficult to rationalize with a 4.3% unemployment rate. But still, when the Fed is expecting to end the year around 4.3 to 4.4% unemployment, each incremental uptick, including in this August payroll report, is going to be enough to get their attention. And for that reason, I think we will get that quarter-point cut in September.
Oh, boy. Well, the August Producer Price Index out Wednesday, the Consumer Price Index for August on Thursday, and that Fed decision on rates just about 10 days away. Our thanks to Stuart Paul, U.S. economist with Bloomberg Economics. We move next to tech giant Apple, which will hold its fall product launch this Tuesday, September 9th, where it's expected to introduce a new iPhone 17 lineup, and it comes as the company explores using outside AI technology in its products. For more on this and all things Apple, we're joined by Mark Gurman, Bloomberg News managing editor for Global Consumer Tech. Well, Mark, thanks so much for joining us. I want to start with all the excitement around this week's product launch, which will include an ultra-thin version of the iPhone. So what do you expect to see this week?
Yeah, thank you for having me. The iPhone redesign era begins on Tuesday at Apple's next launch event, right? Over the past half decade or so, the iPhone design really hasn't changed much. But over the next 3 years, it's going to change significantly, and that starts Tuesday. And you're going to see that in two ways. One, they're releasing the iPhone 17 Pro and 17 Pro Max. And for the first time in a while, they're going to be redesigning the device. The back is going to look entirely new. It's going to have a new wireless charging area on the bottom half, and it's going to have a brand new camera area, a camera bar, so to speak, on the top part, which extends that camera region right now. Right now, it's in the top left quadrant. Now it's going to really take up about the top third of the whole phone. And that's going to allow some new tricks related to the aperture and optical zoom and some such. So big improvements to the camera on the 17 Pro and 17 Pro Max. And it's going to visually look different. The other phone is going to be what I'm calling the iPhone 17 Air. This phone is going to be about 2 millimeters thinner than any iPhone sold to date. Now, 2 millimeters might not sound a lot on paper or when I say it, but in your hand, you're going to notice a gigantic difference. And this is Apple taking the same strategy as the MacBook Air that it introduced almost 20 years ago. Something that's thinner, lighter, and more marketable, but has some drawbacks on key features like battery life and in some cases, processing power, camera, and overall performance. So you're going to get some trade-offs, but it's going to be a really cool looking phone, and it's probably going to sell far better than the prior fourth iPhone models before they had the mini and the plus phones of the regular variation. This is something sandwiched in the middle between the base and the Pro phone. So that's very exciting.
And any other new devices you expect to see?
I expect to see new versions of all the Apple Watch models. So a pretty significant update to the Apple Watch Ultra, the Ultra 3, in order to better compete with Garmin. That high-end sports watch market is something that Apple wants to make a big dent into. And then you're going to see a minor update to the Series 11 watch. Last year was more of a significant engineering upgrade. And then you're also going to see upgrades to the Apple Watch SE, which is Apple's entry-level watch. This is something they're trying to position for kids pre-smartphone age. And then we're also likely to see upgrades to the AirPods.
All right, a lot to look forward to. There was also some good news for Apple last week. Now, a federal judge ruled that Apple can maintain its deal with Alphabet, making Google the default search engine on all its devices. And that means that's good news for shareholders, certainly. What kind of money are we talking about in that deal?
Well, Apple is generating north of $20 billion a year roughly from this deal. And basically what this is when you make a Google search, Google makes money from the advertising or the search placement fees that companies pay to have their website result go higher in the search results, right? If you do that on an Apple device, an iPhone, an iPad, a Mac, you name it, Apple gets a cut. It's a revenue share deal similar to the revenue share deals they have on the App Store. In this case, it's a little bit more lucrative. Like I said, north of $20 billion a year is the value here. And there was a real scenario where Apple was going to lose out on that deal because the judge was going to prevent Google from having default search arrangements, not only with Apple, but any companies that had default search arrangements. So this is a quite significant development, not only for Apple and Google, but the whole tech industry, which now breathes a sigh of relief because the precedent has been set that the current government is not breaking up these companies.
Wow, big. Well, I want to pivot to something else, a story that you broke. Apple's Elvis in Vegas AI comeback. That's what I want to call it. Overhauling its Siri voice assistant. And, it's worked with Google and it's worked with OpenAI, Apple. Tell me about this AI-powered web search tool for Siri that they're working on right now, who they're working with, and what it means to the consumer.
In March, Apple is going to finally overhaul Siri. This was supposed to come out several months ago, but it was delayed. At the core of the new Siri, as I broke, is going to be an AI web search tool. So this is going to allow people in Siri and other parts of iOS and Apple's operating systems to get better data from the internet. Siri is good at doing things on your devices, but it really can't get information reliably from the open web. And so this is going to do that with what is known as World Knowledge Answers. That's the internal code name for this feature. Others call it an answer engine internally. So this is a pretty significant deal. This is Apple competing with Perplexity and search on ChatGPT to a large extent, rather than competing with Google. And in terms of who they're working with on this, I've been talking for months that Apple is seeking major AI partnerships. They've talked to OpenAI. They've went very deep in discussions and negotiations with Anthropic, but it sounds like they're going to land with Google. Google has created a custom model for Apple to help power Siri, to really make Siri work more effectively like a Gemini or ChatGPT. And right now, all signs are pointing towards Apple seriously considering taking this agreement with Google.
Well, Apple's awe-dropping iPhone 17 launch event is this Tuesday amid all that talk about AI. And our thanks to Mark Gurman, Bloomberg News managing editor for Global Consumer Tech. And coming up on Bloomberg Daybreak Weekend, a look ahead as the global defense industry is about to gather in London for the UK's flagship sector event. I'm Tom Busby, and this is Bloomberg.
The These days, AI can help you write emails, summarize long meetings, and even create presentations that impress your most demanding customer. But how about industrial AI that uses data and simulation to boost productivity on the shop floor? AI tools that help you understand machine language. AI that helps you grow your business. With Siemens Accelerator, you can use AI services, software, and consulting from a single trusted digital business platform. Plus, you can find the right AI partner without having to search through hundreds of providers. That's AI for real, from the global market leader in industrial AI. Siemens Accelerator. Learn more at siemens.us/accelerator.
Your next product launch is coming fast. Don't let billing slow you down. Legacy systems can't handle usage-based billing. That means your team is stuck gluing code together, piecing through spreadsheets, and running ad hoc queries just to figure out what to bill. With Metronome, you can roll out new pricing in minutes instead of months, whether it's usage-based, seat-based, or a hybrid model. Visit metronome.com to see how companies like OpenAI and Anthropic launch billing as fast as they launch products. That's metronome.com.
Running small and medium-sized businesses is hard work. Business owners need to be sure that their ads are working just as hard as they do. Amazon Ads allows businesses to track and optimize campaigns for better ROI from their marketing. With Amazon Ads, you can be more sure that your marketing is reaching relevant audiences during premium content and shows they're actually watching. Trillions of browsing, shopping, and streaming insights help you optimize your campaigns in real time. And measurement tools show you what's working the hardest. Gain the edge with Amazon Ads.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, we look at some key economic data in China amid lingering questions about tariffs and housing. But first, U.S. defense companies have won some major contracts in recent days, including one to build warships for Norway. Now, this comes as the global defense industry is about to gather in London for the UK's flagship sector event. But as pressure mounts on Britain's fiscal situation, will domestic government spending on security be a priority? For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Caroline Hepker.
Tom, BAE Systems won a high-profile £10 billion deal to supply Navy frigates to the Norwegians recently, in a sign that the UK may be reviving the shipbuilding industry it once dominated. And there's reason. The world is a more uncertain and perhaps dangerous place. Despite an entrenched conflict in Ukraine, Russia's Vladimir Putin has brushed off European concerns about a Russian threat to the continent as hysteria, and consider China's massive choreographed military parade in the last few days that prompted US President Donald Trump to dismiss the idea that China would ever, quote, use their military on us. So with that in mind, it seems grimly apt that the theme for this year's Defence and Security Equipment International exhibition here in London is preparing the future force. European allies have promised to plough billions of euros into domestic defence manufacturing. How quickly that happens and what is bought is vital. Norway picked the UK as the supplier of frigates to help it deter Russian submarines in the high north in what is the biggest ever investment in the Nordic country's defence history. Here is Norway's Defence Minister Tore O. Sandvik discussing that decision.
It was a very difficult choice, and we had four very good contenders, both Germany, France, UK and the Americans, close allies to Norway, all four. But it was a decision with a lot of factors. So we decided to go with the Brits because in the end it was a lot of factors who decided it.
So are you worried at all about Norway's Navy needing the capabilities before 2030, which is when deliveries are due to start?
No, we already have frigates, but we want to exchange them with the new frigates. So this is completely in line with our plans in the long-term defence plan.
That was the Norwegian Defence Minister Tore O. Sandvik speaking there to Bloomberg's Francine Lacqua. So is the Norway deal a flash in the pan or the start of a revival? The government here sees defence as a sector ripe to drive economic growth. As for Britain's own defence, security experts have judged Britain currently incapable of defending itself against a ballistic missile attack, given a combination of long-term underinvestment, botched contracts and poor recruitment. So joining me now to discuss all of this, what's happening here in Britain and the global context, Bloomberg's Ros Mathieson and Tony Halpin, who leads our team covering the Russian government and economy. Welcome to both of you. Thank you. Ros, how acute is the security threat, in your view, facing the UK? Perhaps we should start there.
Well, you were just laying some of it out because, like a lot of countries, the UK arguably took their foot off the gas for many years when it came to its own security and spending to keep up with security threats, and perhaps a sense of complacency because the UK, like others, falls under the NATO umbrella, that somehow, NATO would magically come to the rescue if needed. And there's been a realisation across the board on that, particularly over the last year or two. I mean, there are two wars still going on. There's a war, obviously, in Gaza and the war in Ukraine, and other potential threats on the horizon, non-state actors, particularly cyber attacks. So the threat has grown more complex as we go on. And really the renewed question also of a nuclear threat, given all the international guardrails, the architecture around, nuclear weapons seems to be falling apart. Those understandings about how to manage arsenals and behaviour. I mean, is there an immediate threat to the UK from, say, Russia? Unlikely, but we are an increasingly multipolar, complex world. And that's a lot for the UK, especially, as you were noting, with limited air defences of its own.
Yeah, Tony, more dangerous world. Perhaps we should think about Vladimir Putin. The war in Ukraine, is it going to end? What's your view now?
Well, eventually, of course, it will come to a conclusion, but I think there's a great deal of concern, particularly in Europe, that they don't see a near-term horizon in which the war does come to an end. And even if it did, even if we got to a point where the active fighting stopped, that doesn't resolve the crisis, because you have this enormous front line, something like 1,000 kilometers long in eastern Ukraine, which, if there is a peace agreement, will require policing. That will require troops on the ground from other countries to make sure that Putin doesn't, in fact, initiate another conflict. That's going to require commitments from Europe, which are very difficult at the moment to see them meeting over the long term, because it's large numbers of troops, it's large numbers of military commitments, and it's going to go on for years unless tensions abate somehow. And it's difficult to see how tensions do abate when Vladimir Putin's in the Kremlin and they basically have ripped up relations with Europe. So even if the fighting stops, which is a big question mark at this point, once that happens, the crisis continues for years and potentially decades.
Wow. In terms of the UK, to what extent is defence spending then for the British government a priority? I mean, we know that they've talked about it a great deal. Defence Minister John Healey, the Prime Minister, the new NATO defence spending commitments, but it's a difficult time fiscally for Britain too.
Well, it is. I mean, Keir Starmer, the Prime Minister, back at the time of the NATO summit, he said the first duty of a Prime Minister is to keep the country safe, and that sits above all other duties. And so, it is a priority for the government. We've got the recent news that the UK is going to buy at least a dozen new US-made F-35 fighter jets, for example. It is part of the NATO pledge to increase spending on defence as a proportion of GDP. It's going to have to commit to getting there. The question is, at what point does it get there? Is it closer to 2035? And the big but, as you were saying, is Chancellor Rachel Reeves has some very delicate fiscal waters to navigate. And she's got her budget in late November. There's a lot of chatter that she will need to raise taxes or cut spending. I mean, some estimates are up to, £51 billion to fill a hole in public finances. And so where do you find that money? How can you show that you're still spending money towards defence in those environments? And do you face potentially a backlash at home if you're cutting welfare in order to divert money into defence spending?
And yet the UK has been at the forefront of trying to support Ukraine, being at the heart of the so-called coalition of the willing. Tony, President Putin doesn't obviously want NATO troops in Ukraine. I mean, how likely do you think that might be?
Well, this is one of the big unanswered questions, I think. Russia says consistently, Putin says that he will not tolerate the presence of NATO countries' troops in Ukraine. They've said all along that they can't allow Ukraine into NATO, but they don't even want NATO troops present in Ukraine. Given that the coalition of the willing is basically comprised of countries that are in NATO, it's very difficult to see how you square that circle. Ukraine, of course, is very concerned to ensure that it has security guarantees that mean something and aren't just on paper. So they will want to know very concrete answers to very concrete questions. Who comes if the war starts again? What do they send? When do they send it? How can we expect to defend ourselves in these different scenarios? And at the moment, the coalition of the willing isn't really sketching out the answers to that question that would allow them then to say, okay, well, we feel fairly secure in the event that the war stops and Putin continues to present a threat to us.
Meanwhile, the uses of technology within Ukraine are being rapidly integrated within the defence space across Europe and here in the UK. In the next few days, we're highly likely to see a lot of that. In terms of the frigate deal for the UK and that £10 billion that I mentioned, the idea of reviving shipbuilding in Britain, it does look like the Nordics are looking to the UK. And there was also a big question mark about that, wasn't there, Ros, about actually whether Britain and this defence spending sort of gusher that we're expecting was going to come to Britain.
Well, yeah, and the UK did beat out other countries. You know, it was looking like France, Germany and the US were also competing for the Norway frigate deal. And a big selling point for the UK was that interoperability of their vessels, right? Which is they work well together, that's much more efficient, it reduces costs. And that's increasingly something that's going to be on the table with defence deals. And that's possibly a selling point for the UK, kit that talks to kit. And systems and equipment that work together. And a lot of that is what can BAE, for example, get out of the pie, right? The frigate still will create some jobs in Glasgow. Interestingly, BAE Systems recently raised its earnings outlook for the full year, and it talked about being positioned particularly to contribute to the US Golden Dome Homeland Defence project. So certainly, you know, BAE is optimistic about what it can get, but it's also a lot of competitors for this increasing pie, and the US is, you know, pushing very hard for its companies to be involved and to get deals. It's a bit of a crowded field, and so the UK is going to have to show that it's bringing something special to these deals in order to keep winning them.
Tony, what do you think about the European defence spending budgets, commitments, what it means for the industry, the speed of developments?
Yes, well, I mean, it's boom times for defence industries across Europe, of course, because nervous Europeans worried that Trump might want to walk away from NATO, committed to enormous increases in defence spending, in line with his demand to spend something like 5% of GDP on defence. But one of the lessons from the Ukrainian war is indeed that there's this great imbalance between spending on systems that countries might be interested in, tanks, missiles, warships, you know, which cost millions, sometimes hundreds of millions of dollars to build, and the effectiveness of those systems on the battlefield. Ukraine has been very successful in repelling Russian attacks using drones. You can take out a $2 million tank with a $200 drone. So there's a great imbalance in effectiveness here, and some of the spending, I think, in these countries isn't yet reflecting the changes on the battlefield that we're seeing.
OK, let's see whether that is addressed at this industry gathering in London in the coming days. My thanks to Bloomberg's Chief Asia Correspondent Ros Mathieson and to our Russia Government and Economy team leader Tony Halpin for speaking to me. Looking ahead to the defence industry's DSEI exhibition in London in the next few days. And you can find details about new defence industry deals on the Bloomberg terminal and our website. I'm Caroline Hepker in London. You can catch us every weekday morning for Bloomberg Daybreak Europe beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Tom.
Thanks, Caroline. And coming up on Bloomberg Daybreak Weekend, to look ahead to some key economic data in China and what it means for the world's second largest economy. I'm Tom Busby, and this is Bloomberg.
These days, AI can help you write emails, summarize long meetings, and even create presentations that impress your most demanding customer. But how about industrial AI that uses data and simulation to boost productivity on the shop floor? AI tools that help you understand machine language. AI that helps you grow your business. With Siemens Accelerator, you can use AI services, software, and consulting from a single trusted digital business platform. Plus, you can find the right AI partner without having to search through hundreds of providers. That's AI for real, from the global market leader in industrial AI. Siemens Accelerator. Learn more at siemens.us/accelerator.
Your next product launch is coming fast. Don't let billing slow you down. Legacy systems can't handle usage-based billing. That means your team is stuck gluing code together, piecing through spreadsheets, and running ad hoc queries just to figure out what to bill. With Metronome, you can roll out new pricing in minutes instead of months, whether it's usage-based, seat-based, or a hybrid model. Visit metronome.com to see how companies like OpenAI and Anthropic launch billing as fast as they launch products. That's metronome.com.
Running small and medium-sized businesses is hard work. Business owners need to be sure that their ads are working just as hard as they do. Amazon Ads allows businesses to track and optimize campaigns for better ROI from their marketing. With Amazon Ads, you can be more sure that your marketing is reaching relevant audiences during premium content and shows they're actually watching. Trillions of browsing, shopping, and streaming insights help you optimize your campaigns in real time. And measurement tools show you what's working the hardest. Gain the edge with Amazon Ads.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. China's private manufacturing gauge just flipped back to expansion. Rating Dog's PMI hit 50.5 in August, beating all forecasts. But questions linger with tariffs, weak confidence, and housing still a drag on the world's second biggest economy. For a closer look, let's get to Bloomberg's Charlie Pellet.
Tom, China's economic momentum is weakening after solid growth in the first half of the year. Bloomberg Economics says a government crackdown on price wars is holding back production, with a worsening downturn in the housing market putting an additional drag on activity. So what should we expect when we get fresh readings on Chinese consumer and producer prices? We bring in Bloomberg Markets Live strategist Mary Nicola. She is in our Singapore radio studio. Mary, thank you so much for joining us. The place I'd like to begin with is, first of all, your expectations for both headline and core CPI next week.
So China, I think one of the big things is that it's been struggling with is deflation. So I think we're going to probably see more of those disinflationary pressures coming through, because of the fact that we're not seeing a particular uptick in consumption. We've seen retail sales data from the previous month that was quite weak. So overall, it doesn't look like there are any significant price pressures really coming through just yet. Obviously, there's some upside in terms of the initiatives that the government is pulling through on the consumption initiatives to stimulate it, but it's still in early stages and it's in early days. So I think what we're going to see is just more disinflation, and that trend is likely to continue. So we'll see just more of the same.
Yeah, specifically then on PPI, are we looking at less deflation or an outright turn into positive territory?
Oh, it's definitely early days on that one too, because we've had consistent and several months of deflation on the producer price index. The government has launched this anti-involution campaign, which is to try and limit this excessive competition. But we still haven't seen a true turnaround there in terms of what's coming through. We've seen in earnings that the competition is really fierce among many of the commerce platforms. So in terms of PPI, you're likely still to see a deflationary pattern.
Now, PMI surveys have shown input costs are up, but selling prices are capped. How much pass-through should we expect from factories to consumer prices?
Well, I think what we're seeing is the fact that consumption is still very tepid. And because of that, it looks like there is not as much pass-through coming through. Retail sales is still weak. We have to remember that the Chinese household is still recovering and trying to recover from what is happening in the property sector. There's still that property sector malaise. We've seen lots of households come back and try to pay back their mortgages, where they're not taking out as many new loans. We've seen that in last month's data. And again, we could see that in this month's data, where that trend continues, where they're trying to pay back their debts. So if we're seeing consumption not pick up and still that the policy stimulus hasn't come through, it looks like the pass-through in terms of getting to the consumer is going to remain limited.
How likely are we to see any indication that energy is playing a role in PPI, be it oil, refined products, or electricity tariffs?
Oh, I think more broadly, that's one of the catalysts driving inflation lower, not only in China, but more broadly throughout Asia. So if we look at CPI in countries like Indonesia, India, for example, we're seeing significant declines in inflation. A lot of it has to do, if we look at just how oil prices have declined since the start of the year, that has become a clear catalyst for lower prices everywhere in the region. And of course, if we continue to see that trend in oil prices, that's obviously going to filter through to headline inflation in Asia and, of course, more broadly, globally.
From energy to property weakness, how are rents and housing-related services feeding into CPI?
Yeah, that's still going to have downward pressure on CPI because we haven't seen a strong rebound in house prices, and house prices still remain very weak. The problem with housing in China is there hasn't been a broad-based recovery, and there hasn't been a broad-based package in terms of stimulus to really offset and to lift the property market. So what we've seen is consistent decline in housing prices. We've seen that property sector malaise really stay within the economy, and that's been quite a drag. But what the government has tried to do with some of its stimulus initiatives is to try and offset this property drag by supporting consumption or supporting this AI tech drive, which has been one of the key things that has been supporting the equity markets. And that's one of the drivers that's going to continue, where the focus has been on bringing China up that value chain and bringing AI as a key support for the economy.
Mary, with consumer confidence soft and household savings high, is demand strong enough to lift services inflation?
You know, it's interesting because one of the key things that the government has been focused on is providing subsidies and support for specific services, whether it's childcare or other services. But at the same time, we've seen households build their reserves and build their ammunition and savings for a rainy day. And that has a lot to do with what we've seen in the property sector. Keep in mind, a lot of households in China do put much of their savings into houses and much of their investment into houses. But we're seeing a shift, and that shift is coming through in terms of shifting into the equity market. So we've seen how bond yields have risen as a result of that transition for households from the bond market into the equity market. And given that household deposits are near record highs, we could see that shift continue and that actually be supportive for the equity markets. So one of the things about the equity markets is if you continue to see gains, that could improve overall optimism, and that could actually help consumption. So it's almost a feed-through channel from what we see from the equity markets down to consumption. And so we could see a pickup in services, but still, it's still in its early stages.
I have to ask, for Chinese consumers and by implication for the Chinese economy, certainly tariffs, weak confidence, housing are all headwinds. Of those three, is there one that's being more talked about than any of the others?
I think for a great deal, it's interesting to see tariffs have been largely shrugged off, and that's because of the fact that we've seen strong exports. The property sector has been something that's been trudging along in the background. I think what the key focus is for the markets is just on consumers and ensuring that there's a pickup in consumption. Because at the end of the day, if you have exports feeding through and supporting the overall economy and investment, especially on the property sector side, declining, you still need that consumption channel to come through to help support growth. And that's going to be actually the key trigger that helps growth into this year and into next year. So it really will come down to consumption. And I think that's going to be the key focus, whether it's retail sales or some of the policy initiatives that the government focuses on.
That's Mary Nicola, Bloomberg MLive strategist in Singapore. Let's get some more perspective now. Earlier in the week, we heard from Kevin Sneeder, APAC ex-Japan president at Goldman Sachs. He struck an optimistic tone on Chinese equities amid resurgent flows. Sneeder spoke exclusively to Bloomberg's Avril Hong at Goldman's Asia Leaders Conference in Hong Kong.
So, Kevin, let's start with China, because we're seeing in terms of the market performance, it's really being underpinned by liquidity, even against the backdrop of these macro risks. What are you seeing from global investor flows?
Well, certainly, as you say, this is a very interesting time in terms of the rally that's taken place in Chinese equities. This is not an overnight rally. It's worth noting that it was a year ago that we saw the media conferences and the announcement of various measures. And really since then, there have been a few milestones along the way. The first milestone, of course, was in Hong Kong, where we saw the Hong Kong market really move. And now we're seeing the onshore market, A-share rally, taking place. And what we're hearing from our clients and investors is sentiment has improved. Foreign investors are showing more interest, but the positioning changes are yet to come. Most of what we're seeing is still domestically oriented. And I think it's worth remembering that a big driver of this rally remains the retail investor in China. And it's that retail investor who's got this excess saving that a lot of people are talking about, the household savings that are built up, and they're looking for other options, and the equity markets are providing some of that focus. But sentiment has improved. The first half in China saw relatively strong GDP growth. The second half is likely to be more challenging. So we should keep a careful attention to the underpinnings here, the fundamentals. China still faces many challenges, but this rally in the equity markets has got some legs.
What are your clients saying about what they want to see more of before that positioning comes back?
Well, it really depends which clients. If, from your question, you're asking about the foreign investor, clarity and consistency are the key words that come to mind. Because ultimately, there's still a focus on some of the headwinds, the demographic headwind, deflation and the challenges that we're seeing from a combination of overcapacity and demand limitations. And finally, of course, the backdrop for all of this, the geopolitics, remains and lingers. So progress in each of these is what underpins confidence to ensure the foreign investor can return and the flows can move. We are seeing some return, though. I think it's important to acknowledge that. Hedge fund positioning has improved. But the long onlys, the longer term investor, that's going to take a lot more clarity and a lot more consistency before we see the flows move.
Has that been enough for Goldman to lower its bar on investing in China, as well as, build on the business that's already here?
Well, we've been in China for 40 years. We have a long history here. We are very committed to our business here. We've been maintaining the footprint through tough times and good times. This is a moment when we see certainly opportunity, and we continue to look at China with a lens that says there are plenty of places where our clients need services, need the support that we can provide, and we're going to be there for them. And it's with that lens, our client lens, that we're very focused on the opportunities that we have in China.
You talked about Hong Kong earlier. We're seeing this IPO boom. Is Goldman looking at expansion potentially here?
Well, this has been a busy time. 57 so far this year, 200 in the pipeline. There's a lot of activity building in Hong Kong. And in that context, we're hiring. We certainly are hiring. We continue to look at the opportunity to meet the needs of our clients. But we'll do it in a thoughtful way, because one of the things which I'm very focused on, and my colleagues are very focused on, is making sure that we're there for our clients, but we don't get ahead of ourselves. And so it's a thoughtful approach, but we certainly are hiring.
Kevin Sneeder, APAC ex-Japan president at Goldman Sachs, speaking with Bloomberg's Avril Hong. And I'm Charlie Pellet. Catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcasts. Tom?
Thanks, Charlie. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want with PayPal, Venmo, Pay Later, and all major cards, so you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
Hiscox Small Business Insurance knows there is no business like your business. Across America, over 600,000 small businesses, from accountants and architects to photographers and yoga instructors, look to Hiscox Insurance for protection. Find flexible coverage that adapts to the needs of your small business with a fast, easy online quote at hiscox.com. That's HISCOX.com. There's no business like small business. Hiscox Small Business Insurance.
Promotional products aren't just giveaways, they're strategic brand tools. That's why so many businesses turn to 4imprint. With thousands of customizable options from premium apparel, drinkware, tech, totes, and more, 4imprint offers the variety to fit your goals and budget. Many items come with no setup charge to help you maximize value even more. With expert support, fast turnaround, and a 360-degree guarantee, you can be 4imprint certain your order will be done right on time. Explore more at 4imprint.com.
4imprint.